Welcome everybody to the February 18th, 2015 Making Sense Project webinar. It's a pleasure to have you here with us. My name is Hilary Hunt, and I'll provide a brief overview of our webinar and give some instructions, and then that'll be followed by Tricia Heisey talking about basic bankings, what students should know about banking today, and financial education resources available from financial institutions. We were originally planning to have another guest speaker with us, Chris Rocky from PNC had planned to be with us, but due to a family emergency was unable to join us today on the webinar. So we appreciate Tricia stepping up and taking on the topics, or covering more topics than she had planned to originally. And then I'll wrap things up this evening with some professional information and an update on our model curriculum, a call for some helpers to join a new team that we're forming, and then wrap us up here this evening. The Making Sense webinars are a partnership between the Pennsylvania Department of Education and Penn State University. They're a part of a series of financial literacy and economic education initiatives. The goals of our program are threefold: to provide curriculum resources, help increase content knowledge. I know that some of the things Tricia is going to be talking about later today will probably be very new to almost everybody that's on with us tonight. And then also share professional information, things that help you just to do a better job as a teacher in a variety of different ways. I want to thank and acknowledge our project partners, both Sally Flaherty with the Pennsylvania Department of Education and Dr. Kathy Bowen, professor at Penn State University. And with that, I'm going to ask Tricia Heisey to unmute, and I am going to switch things over here to Tricia in just a second. Oh, actually, I'm sorry, Tricia. I'm not handing things over to you. This was our shift from our original plan. We have Tricia was having a problem getting her slides to forward in advance before our call, before the webinar began. So I'm going to play Vanna and or just be the mouse clicker for Tricia here this evening. So Tricia, are you there?
Yes, I am.
All right, okay, very good.
Good evening. Well, it's a privilege to be here. I'm looking outside the window and I don't see any snow squalls yet, so we're in good shape.
Oh, it's coming. It's down where I am, so it's coming your way.
Well, I'll close the blinds so I'm not distracted.
That's great.
It's a privilege. I'm the financial literacy educator for Belco Community Credit Union, and some of my main roles is representing Belco in the community. I work with different chambers of commerce, with different nonprofit organizations, but my passion and one of my main objectives is to provide financial education. So I work with employees and I work with a lot of high schools, as you'll see during my presentation. I've been with Belco for 32 years, so I started right out of high school. So I see the need and the tie-in for financial education in the high school arena. Okay, Hilary. So I want to start with the basics, just going over a few things, how a credit union differs from a bank. Okay, next slide. Yep. Okay, so you're going to see a couple things that are different, and then I'll go over some similarities that we have as well. So credit unions are not for profit. Any profit that a credit union makes goes back to its members in the way of higher rates on savings, lower loan rates, and products and services with minimal or no fees. A bank, on the other hand, they're for profit and they have to make a profit for their stockholders and their board of directors. At a credit union, we have volunteer board of directors, and any member can run and serve on our board. Our credit unions, they are member-owned and member-operated, and with the volunteer board of directors, every single member gets to vote on its board. So whether you have $5 in your account, $50,000, or $250,000, every member gets one vote. Eligibility is a big difference, whereas anyone can join a bank, but at a credit union you must be eligible for membership. either through your employer, through an immediate family relative, or through a particular area. For example, Belco's community chartered, and we have one of the largest charters in the state of Pennsylvania. We serve individuals and businesses in Adams, Cumberland, Dauphin, Lancaster, Lebanon, Perry, and York counties. So we serve a particular demographic area. One of the similarities are that we are both federally insured up to $250,000. IRAs are a separate $250,000 security, and credit unions are insured by NCUA through the National Credit Union Administration, whereas banks are insured through FDIC. Okay, so finding a credit union, you may ask, how do I know if I'm eligible for one? What I suggest you can do is go on a credit union campaign that we launched a number of years ago, and it's called the I Belong campaign. ibelong.org, if you go onto that website, there's a number of different ways you can search it. One is a simple search where you're just keying in your address. There's an advanced search where you can key in your affiliation, such as your employer, your school that you attend, church or organization, or the last name you're keying in the credit union name. When you key in that information, it'll pop up any credit union that you are eligible to join. So it's a really nice feature to know. Some credit unions still work with particular employers, while others have expanded to community charters. Financial resources, this is another similarity that both credit unions and banks have. We both provide a full range of products and services. We have all different types of savings products, investment and retirement options, as well as many different loan options. Most credit unions and commercial banks both offer these products and services to both businesses and individuals. As I said, I've been with Belco for 32 years, and wow, have I seen a lot of changes over those years with technology. I remember when the first ATM started, and I thought that was such a great machine, and then, you know, that wasn't convenient enough, so we came up with the drive-up ATMs, and that was nice because then you didn't even have to get out of your car, especially if you have young children. Well, then as we continue to make advancements, as consumers nowadays, you know, want bigger, better, faster, and more convenient, they came up with smart ATMs, which ATMs now can even cash a check to the penny. The typical ATMs might have $10 and $20 bill increments, but now the smart ATMs can cash your check. You don't even need to key in it, put an envelope in. You just slide your check in. Again, can cash the check to the penny. You can even say how you want the denominations. Some even dispense postage stamps and gift cards. Then, because as consumers we don't even want to leave the comfort of our home, we have remote deposits now. Now, not everyone is automatically eligible for remote deposits. Some institutions will base it upon your credit score and your history with the financial institution. But remote deposits, it's really a smartphone application where you're taking a picture of the front and back of your check, and it gets credited to your account. Typically, there's anywhere from like a 1 to 3 day time period before it's actually credited. But technology, it just amazes me how we've advanced with things such as that. Then bank by phone. We have a 24-hour phone service, which many institutions do, where you can call up and transfer money, find out what your balance is, or you get up in the middle of the night, you can't sleep, you can balance your checkbook or see if the check cleared and so forth right over the phone. And then became online banking, which was nice because you had that visual there. You can do all sorts of things with online banking. Again, check your activity, transfer money, take out certificates, just a whole host of things. To make it more convenient too, so we don't have to write out checks, we have the bill payer system where you can just go on and electronically deduct funds from the account to pay utility bills and so forth. And then the smartphone banking. Most folks have smartphones now, so you can actually download the app from your financial institution and again do most of your transactions right there. I've already stood in line at the register to see, oh, okay, this is how much is in my account, or you want to verify payrolls posted or whatever the situation is. All by the use of your phone, that technology is available. And then the ATM cards, that used to be typical. It would come out of your savings or checking. And I never forget when check cards first came out, and I thought, well, that's crazy, just write a check out. But check cards are so popular now, I think it's almost widely accepted as easily as cash. Sometimes, you'll hand cash to a clerk and they're not even sure what to do with it. It's so crazy. So check cards are really popular. Whether you hit debit or credit when it asks you for a transaction, it's going to come from the checking account. It's going to be deducted. Some people get confused with that. So check cards are wonderful, very convenient, and you can use it at most places that accept like Visa, MasterCard, and things like that. Then the EMV smart cards, which I'm going to talk to you about that in just a moment. So what is an EMV card? The EMV stands for EuroPay, MasterCard, and Visa. And why are we doing this? Because there's a lot of fraudulent activity, and a lot of that is because information is stored on the back of a card on that magnetic strip. Now, many European countries have used this technology for several years, and because they have this technology, more and more people then have come to the U.S., and that's one of the reasons fraudulent activity is higher in the U.S. So by adding this Eurochip technology, experts estimate it should decrease the lessen fraud by 70%, which is an outstanding percentage. So again, some of the differences: with the magnetic strip, the information is stored in the back. With the chip, every time you use the card, and instead of swiping it, they refer to it as dipping, you're going to dip the card into this reader, it creates a new code each time. So it's a lot less likely that that can be duplicated, that card. The initial round of cards will have both the magnetic strip as well as the chip, because it's going to take quite some time for all of the financial institutions to reissue cards and for merchants to get these new readers in place. I mean, you can imagine the cost of it, because you might have a store that might have 3 or 4 readers now for the magnetic strip that you slide, but just imagine the Walmarts and Targets and things like that when they're like tens of thousands of readers. So it is very costly. The important date is October 1st, because after that time, if they don't have the new reader in place, then any loss that may occur due to fraud is the merchant's responsibility. So at that point, again, if they don't have that new reader in place with the chip, then that merchant takes on that responsibility. Okay, so just a little bit of trivia, some facts here. In 2015, by the end of this year, 1.1 billion EMV cards will be issued. 13 million point-of-sale systems will need upgrading. We just talked about that to this new, to be EMV compliant. And the average cost to issue and replace a new EMV card is $3.50. So again, it's expensive for the merchants, it's expensive for the financial institution. Some financial institutions may pass that additional charge on to their member or to their customer. But in the long run, I feel it's going to be a good investment because of the decrease in the losses due to fraud. So I want to talk to you about, I can talk what Belco particularly does in the schools. Many other credit unions, and I know there's banking programs and so forth. So some are very similar with what's out there, but I want to direct you to what we're doing as well. Again, I work with many nonprofit organizations, also with students, parents, and volunteers. This year alone, we're sponsoring 15 local high schools with a financial literacy booklet that's written by CMARC. And in the picture, you can see the booklet. It's not, there's maybe 60 pages tops. So it's a nice compact booklet, but it's packed with a lot of valuable information. You can go on CMARC's website to check out. They have other different booklets available. This one typically is best for high schools. There's one for more of an elementary grade level, as well as some for adults, like how to open and manage a checking account. Some of their booklets are also available in Spanish as well as English. What our sponsorship does, it allows us to work with many different high schools in the area. I follow up with the sponsorship by going in and providing classroom presentations. And I'm sure as teachers, it's kind of nice to have that break and have someone come in that's an expert in that area, as well as they can give stories and examples of what they have seen firsthand in the financial industry. So for example, the budgeting activity, I talked to them, we set SMART goals, we talked to them about goal setting, but the bulk of the time is really doing a very fun interactive budget activity where they work in groups and they randomly they pick a card which will tell them what their occupation is, the group's occupation. And then they quickly understand necessary expenses such as utilities and health insurance and things like that. Just even finding out how much comes off your paycheck in taxes is an eye-opener for them. At some point then, during the budget activity, they get to make real-life adult decisions on transportation options. There's housing options, clothing, food, and so forth. Time and time again, I hear students say, wow, I never realized how much my parents, spent and paid for just everyday household expenses and things like that, and they have a much better appreciation for the parents. I talk to them about credit basics, understanding credit, some financial terms that are related to credit, as well as telling them to start credit responsibly. I usually share a little story with them about how many of them look forward to the day when there's no more report cards and hands fly up. They can't wait. But I tell them they're going to get a report card the rest of their life, and it's in the form of their credit report or their credit score. So just like an A is good in school, an A is good on your credit report. That's going to determine what you can buy, when you can buy it, and how much you're going to pay for it. I also have a presentation on ID theft. And towards the end of the presentation, I'm going to give you just an abridged version of a PowerPoint that I do on ID theft for the schools. Belco, we promote our youth and young adult savings programs because with many institutions as well, it's important to get the children to start saving at a young age. So we personally make fun clubs. Our Savings Safari Club is for 12 and under. Then we have an Extreme Teens Club for 13 to 18-year-olds. And then we have our Smart Start package for 18 to 29-year-olds. Not only do we offer incentives and rewards for them saving, but we also promote academic excellence. So for grades kindergarten through 12, for every A they get on the report card, if the parent or grandparent deposits it, we will match that up to $5 per marking period. So again, we're rewarding them for doing academic excellence. Then once they graduate and go on to college, if they take at least 3 accredited courses and maintain a 3.5 GPA, right now we're giving out free Kindle Fire. So that has been a fabulous program, and a lot of young adults are taking advantage of that. We also offer 5 $1,000 scholarships each year, 3 for high school seniors and 2 for members continuing their education. So again, we're linking the financial education with the importance of savings as well as academic excellence. I don't know how many school districts are on signed up, but I'd be interested to know how many of your school districts require financial education as part of your curriculum. I know this year Central Dauphin school district in the Harrisburg area has a required 9th grade class. All 9th graders have to go through that class, and I'm thrilled with that because I'm such an advocate for financial education. My son is in 11th grade at Central Dauphin, and I just had the privilege of survive, but he's taking financial management as an elective, and even at his age, almost 17 years old, he said, you know, wow, the information we get here, every single student should go through this. So I'm really glad that Central Dauphin has taken that approach. I know State Representative Rosemary Brown, if she hasn't already introduced it, she's in the process of introducing a bill that would require high schools to have some type of financial education requirement component. Okay, so we also work with schools to do mock interviews. We support their PTOs and events. We work with them with their after-school programs. Also, there's a wonderful committee that the Harrisburg Chamber has, and I would encourage you to check with your local chambers of commerce. They have an education business partnership committee. It's one of my favorite committees to serve on because you have the business sector, you have a lot of like the career coordinators at high schools, as well as post-secondary schools, and we're all working together. We do a host of different projects, but one of the things that the schools are asking for from businesses, what can we do to better prepare these students so when they graduate? So, you know, even just like soft skills, communication skills, things like that is very important. So that's a great committee, and I would encourage you again to check with your local chamber. We sponsor different high school business challenge. We've hosted a reality fair in hand with Pennsylvania Credit Union Association. And we also financially support and provide volunteers for junior achievement. Okay, I'm very involved with junior achievement. Now I work with junior achievement of Central PA as well as junior achievement of South Central PA. I'm on the regional council, and I work with volunteer at all of their different events and also teach classroom curriculum, and Belco sends volunteers as well. Again, I know other financial institutions are doing the same. But classroom curriculum is through grades K through 12. It's typically 5 45-minute sessions, and a lot of times it's, you know, a volunteer from the community, from the business. Sometimes it's a parent. Junior achievement focuses on 3 components: career exploration, entrepreneurship, and financial literacy. Typically, again, you might go in once a week, but they have the whole curriculum already outlined. They give you a booklet. It's very simple for the volunteer to do. JA in a day, sometimes they'll take that 5-week curriculum, those different 5 sessions, and then just do that all in one day. That's typically sometimes at the elementary school level, but sometimes even at the middle school level. JA BizTown, the one that closest here is in York, Pennsylvania. If you've never seen that, Google it. It's a wonderful program. There's a curriculum that's taught for mainly 5th and 6th graders, and they work on career exploration and so forth, but they learn about different jobs. They have to apply for a job, and they go through an interview. There's a town mayor that works at City Hall. There's a DJ. There's a snack shop. You know, lots of different. The kids are actually running a town for a day, so it's phenomenal. Finance Park is for usually anywhere between 10th and 11th graders typically attend that, and that's like a budgeting activity as well that they do. Because of school budgets and things like that, and they found schools saying it's a little difficult to get students for busing and so forth to get them to York, this year they launched a new program called Real Life. I had the privilege of helping out, and again it was at Central Dauphin High School, but the Real Life program, it's broken down into different components. There's a financial Jenga, there's a real life, almost like a life-size life game you can see in the bottom corner of the slide, and they roll the dice and they have to go to the different blocks and then see what life has handed them on the different blocks. Part of the time they're doing Insurance Jeopardy, so they're learning about that. The Price is Wrong, where it's kind of set from the Price is Right game, as well as part of the activities is budget builder activity that they do at Finance Park. It's just streamlined a little to fit into the day. The STEM Summit, they started that last year and is extremely popular. It's held right at the school and it's a one-day program. It consists of 9 30-minute sessions where students will rotate through in groups of 20 to 30 students. And the sessions are a mixture of hands-on experiments, team competitions, and career panel presentations. The goal of the STEM Summit is to inspire students to pursue a STEM focus in their academic selections for the science, technology, engineering, and math course. And then the JA Symposium. This is probably one of my favorite activities and events. High school boys and girls. JA Central, I know, has one for both young men and young women. JA South Central right now just has a young women's symposium. About 125, again, either young men and young women, take the day, they go in, and we do different activities with them. Part of it's budget building. They listen to career panelists. We show them how to properly write a resume, do job interviews, and things like that. So it's a wonderful day, and it ends with a motivational speaker who is absolutely phenomenal. So that is the highlight of one of many of the students' high school careers. And if any of your schools, if you participated in any of these events, feel free to put a comment on and to let us know how you like them. Or if you want more information, just check your local junior achievement. Again, because some of the junior achievements have smaller offices, all of these events may not be available in your area. Other ways credit unions work with schools is by starting in-school branches. The purpose of the in-school branch is really to assist young people in personal finance, as well as prepares them for employability skills. So what is an in-school branch? It's really a partnership between the financial institution as well as the school district. It gives this in-school branches students opportunities to learn about these money management skills, and it also helps prepare them with math and organizational skills, as you see outlined there, by really getting the students involved in the operation of the branch. Most branches will have limited hours. Usually they have a credit union staff person on site. So it might run like a Monday, Wednesday, and Friday between 11 to 1 over the lunch period. So they'll have a staff person there, or sometimes they will stipend a teacher for them to oversee the program. Security, it's not available to the public, so it's still closed for the students and staff to participate. So it's secure in that sense. Also, one of the drawbacks that I've heard in the past, while it is very successful, some teachers are sometimes a little hesitant of giving, say, a student maybe a paycheck or something like that to deposit because, you know, it's confidential information and they would just rather prefer going to a branch off-site. But there are many different advantages, and I'm going to show you some pictures in the next slide. They can vary. Some are very simple. Okay, they can vary greatly in size as well as cost. You can set up just deposit days in your school where maybe the financial institution will come in, you know, once or twice a month and take deposits and then take them back to the branch. There are standalone like kiosks that is in the upper left or upper corner. And then down below, the bottom picture shows pretty much a full-size setup. Many schools will actually use their school store as a place to incorporate the credit union branch. Okay, the credit union benefits, because they're really growing their future membership by having an on-site branch. It's a great rapport, too, with the staff. Great branding and great way to promote that financial education in the school system. Again, they can reach out to parents and staff as well. And high school students, many times, they'll actually stay on with the credit union after school and work, or even during Christmas break, holiday breaks, as well as the summer. So a lot of times they're planting the seed for future credit union employees. If you're interested in learning more about an in-school branch, I would recommend that you go on PCUA's website. It's Pennsylvania Credit Union Association. You can either follow the path that I have or just simply Google student branches in the search. There are currently 54 credit union student-run branches throughout Pennsylvania, and you can see what credit unions are currently offering the in-school branch. Also, a great resource is through the Michigan Credit Union League. You can go on their website and again in search do the in-school branch. They have an entire handbook on how to start. Even if you have to pitch the idea maybe to your principal or to the school administrators, it takes you step by step exactly how to go about that, how to set it up, policies, procedures, even sample deposit slips and everything. So that is a wonderful, I think it's like 54 pages, but it's a wonderful guide to answer any questions that you may have. And if you're interested, I would strongly encourage you to check that out. Okay, the Pennsylvania Credit Union Foundation is another wonderful resource. I know we've worked with them very closely over the past number of years. Many schools will want to look for a sponsor to provide maybe the financial literacy booklet or to provide instruction and things like that, or even to set up a branch. What you would need to do is work with the credit union because you need to have a sponsor credit union. The sponsor credit union will really work with the foundation directly. For example, the financial literacy booklets that I showed you, they will help pay the cost of the books for 2 years, and then after that their hope is that credit union then will continue to provide that book at the credit union's expense, which we have done for many years with the number of schools that we deal with. Also, as far as the branch, if you are interested in doing that and cost might be a factor, the credit union foundation will match 50% of what the credit union invests, up to $10,000. So if you're doing like a full branch build out, even in a school store, and the credit union is willing to invest $20,000, you can potentially get a grant up to $10,000. Want to make sure I have your attention because the information that I'm going to go over is on ID theft. Again, this is an abridged version of what I teach in the high schools, and I hope you find it as valuable as well. So ID theft occurs when someone uses your name, social security number, and other identifying information without your permission to establish accounts. They might take out loans, file for bankruptcy, even give your name during an arrest. Recent Federal Trade Commission studies explains that ID theft costs U.S. businesses nearly $48 billion annually and costs consumers an additional $5 billion. So how do crooks get your number? Some of the more common ways are lost and stolen wallets, misuse by family and friends, as you can see, theft from mailbox, and data breaches. So I'm going to go over some of them in a little more detail, but this is how they get the number. Who's most vulnerable? Typically 18 to 24-year-olds, because they're just starting out, maybe applying for credit and things like that, so they would be less likely to be turned down. Plus, that age group tends to use a lot of technology, so they could be a target. Elderly people are also a target because they're very trusting. If they receive a call saying that there's a problem with their Medicare, or your grandchild's been arrested, we need your account information, they're going to be more likely to give that information up. So this information, when I go over with the students, also encourage them to share that with their parents and grandparents as well. The average victim spends 30 to 60 hours resolving the problem. They spend between $500 to $1,200 dealing with the ripoff, and the perpetrator gets away with over $10,000 in cash, goods, or services. So here's some trivia for you. We were talking about data breaches. 1 in 4 data breach notification recipients become a victim of identity fraud. Consumers who have their social security number compromised in a data breach are 5 times more likely to be a fraud victim than the average consumer. You know, a number of years ago it was TJ Maxx, and that, you know, a couple years went by and it died off. Then the next big one to hit was Target. Then on the heels of that, it almost became almost an everyday occurrence. Then it was Home Depot and Michael's and Jimmy John's and a number of other ones. Then it even moved to recently to payroll processors like Paytime and medical insurance providers. So this information is out there. It can be hacked into. So it's really important that even as consumers we do our part. Now, the data breach, not every fraudulent activity results in ID theft. As I was sharing with the earlier group, I was a potential to have fraud on my account with the Target breach because I had used my card during that time. So Belco reissued cards for any of those potential victims, and that's very costly for a financial institution. So that happened. I got my new card probably January timeframe, I'm guessing. Beginning of April, I looked at my Visa statement and I thought, how's my Visa balance so high? Here, someone reproduced my new card and took 2 $1,000 cash advances near the Philadelphia area. Now that card never left my site. I never gave it to anyone. And a couple slides later, we'll show you how things like that can occur. So these are the cause and the type of breaches. As you can see, from 2011 to 2014, hacking is the #1 way that these data breaches are occurring. I gave the kids a quiz. I have all these different terms on papers with definitions and they have to match up. But when they see them, they start giggling. It's almost like it's words to rap music, the skimming and scamming and spamming. We're going to talk about some of these in just a little more detail. The first one is the skimming device. The upper corner is a handheld device, and you can see how it fits in the palm of your hand. Most time, you're going to run into people that are very trusting. This is just raising awareness. So when we go out to dinner, we're done eating, the waiter or waitress comes up, gives us our check, and what do? We give them our credit card or our debit card, and they walk off. We're trusting that they're going to process the transaction properly, and most times they do. But they could easily have this device in their hand and swipe your card through. That's where this reader reads that magnetic strip on the back of the card. After a number of swipes and they get this information, they'll either download the information or sell the skimmer, and that thief will then reproduce cards, which is probably what happened to my card. Another thing to look out for, if you go to, say, a craft show or a concert and things like that, the device that they can swipe through, it's called Square, some of the devices are, and they'll have it on their iPad or maybe their phone, and then you're signing right on their phone for that purchase. People can easily purchase those. I've even seen them for sale at Advanced Auto. They can get those devices, so be very careful when you give out your card and who you give it to, and just be cautious. The bottom picture is an overlay on an ATM machine. If you ever go up to a machine and you see something just doesn't look right, or maybe it's not aligned, maybe just jiggle it a little to make sure it's actually the original part to the machine. If there are any doubt, please make sure you go into the financial institution and let them know of it. We are required, as part of our procedure, I should say, is to check our machines daily to make sure no overlays have been placed on our ATM machines. Okay, skimming devices at the gas pump is the next slide, and I just added this for my presentation last week, and the kids were really, they were very, very interested in it. There's lots of clips, YouTube clips and news clips online that you can Google. The middle slide shows the gas where you would insert the card, and people, a lot of times they say they'll pull up maybe in a van to block the view of the cashier. They'll open that door and insert this skimming device. So you unknowingly, when you're swiping your card, when you're sliding it, it's reading that information off that magnetic strip. On the left and the right of it, you'll see where a seal goes across that door. So you want to make sure the seal isn't broken, or in the example to the left, it'll say void if that tape's been tampered with. So just make sure that you look for those things. And again, if you see anything, make sure you go inside and alert the clerk or the owner. Okay, we're going to talk about a phishing attack. A lot of times you might receive an email or a text, and it's usually a generic greeting: dear Visa customer, dear friend. It refers to an urgent problem, and it asks you to key in information, and it might urge you to click on a link within the message. A couple examples that I have: I received one from eBay saying that my account may have been compromised. So at first blush I thought, okay, they have my back, they're looking out for these things. Then it asked me to set up a new account number as well as a new PIN number. Now the site looked absolutely legitimate, but once I saw it was asking for that information, I stopped and did nothing. More than likely that was a phishing attack. There was one several months ago where several institutions in the area were hit with it. People were getting text messages saying that their Visa card was deactivated and they were to call this number to reactivate it. And with that, they had to have a new PIN number. So here, when you made that call, it sounded legitimate, but it was bogus, and people were trying to reproduce cards. So again, just always be careful of things like that. Farming is even worse because you don't even have to click on a link. It's embedded right in the email. And we've seen misspellings in domain names. So right underneath that, underneath domain name URL, you'll see it looks like westcreditunion.org both times. The first one, though, is actually 2 V's. Now, if you're looking at it, it might, well, that's could be obvious, but we live in a fast-paced world where we're all in a hurry. So at first blush, it looks like West Credit Union's website, but it wouldn't be. It's redirecting you to an illegitimate site. Even down like at the PayPal or the Google examples down here, they've just tacked on some letters to the end of the URL line, and it's redirecting you to an illegitimate site. So here are some helpful tips to combat ID theft. I always share with the students, and again with adults, but be very careful. Use strong passwords, not your birth date, not your address. Be very careful in the strength of the passwords. Make sure that you even lock your cell phone, because again, there's so much information on your cell phone, your account balances and things like that, so make sure you're careful with that and safeguard your cell phone. Use upper lowercase letters. Don't share your password with anyone. Handle your personal identification again. Be very careful where that's stored. I would encourage everyone to read your credit report annually. You can get one free credit rating from each of the from each of the credit bureau providers each year. Typically, we recommend the first time get them all at once so that you can compare them to make sure everything's current and you don't see any accounts on there that you did not establish. And then after that, stagger them out so that typically if one reports it, the other two will have it on there as well. So that's my advice to you. Be careful what you carry around in your purse or your wallet. Don't have your PIN numbers written down. Be very careful with that. You should never carry your social security card in there. And again, share these tips with both your friends and your family. Okay, some other helpful tips. Just basically, install the latest virus protection ware, spam blockers, and things like that. Make sure you have the correct browser security levels set up. And again, just be careful when you get emails and things like that, what it's asking for. A financial institution is never going to call and want your social security number over the phone or ask you for a PIN number and things like that. There are many safeguards in place at financial institutions. And the last two slides I have, there are so many different wonderful resources on financial education. I've listed just a few. Some are free. There's an expense for some. Again, sometimes you can work with a financial institution to see if they can sponsor that. Many are more than willing to come into the classroom and present on topics as we discussed earlier. And then I have one more slide with some additional resources. I know the Philadelphia Federal Reserve, they gave wonderful actual classroom curriculum and instruction out. I see the Council for Economic Education is hosting a seminar in Florida in October over the Columbus Day weekend, and that looks like another fabulous resource to utilize. Some are very fun, they're very interactive, and I think that's what's really important when you're working with students. You're making learning fun, so they're going to be more apt to retain this information and pass it along. As you know, Hilary will say, they might not remember it next week or even a year, but believe me, this information is very valuable to them, and they will remember it down the road as they begin putting some of this into practice when they're opening their checking account or getting their first loan. The information will be invaluable to them. Okay, the last slide is questions.
All right, if anybody has any questions for Tricia, please put them in the questions section there in your control panel. We did have one that came in earlier for you. Marta asked, do all credit unions have similar programs? When you were talking about some of the things that Bell.
Many credit unions do. Sometimes it's going to be dependent on their size as to how elaborate they are, so to speak. So we're about $425 million in assets, so we are the third largest credit union in the Harrisburg area. But many do have some type of savings accounts to encourage kids to save.
Great. Thank you so much, Tricia. I appreciate you being here and sharing all of that great information for us. We really appreciate it.
And if anyone has any questions after it, please feel free. You have my contact information to reach out to me individually. Thank you.
Thank you. All right, we're going to move on here in our presentation and talk about the model curriculum and some professional information. Oh, Tricia, and then we had another question. Are there new guidelines to teaching reconciling the checking account with the advent of online banking?
I know the book that we sponsor, they just upgraded that and updated it maybe a year ago, 2 years tops. And I can look through the actual, they have an activity, so as we're going through I can look at that. I know it does discuss about the Check 21, which can clear your checking account instantly, so people can no longer do kiting or have that float period. So I know it definitely addresses that in there, which that's been in the last number of years. But I can take a look as you're presenting and I can answer that later on.
All right, great. Thank you so much, Tricia. I appreciate you staying with us. All right, I'm going to go ahead and move us forward here then and talk about a couple of new resources or information that are available. The first is a new study that came out of Montana State, University of Wisconsin-Madison, and the Federal Reserve Board. It was sponsored through a grant from the FINRA Investor Education Foundation, and it seeks to answer a question that we've been having for years in financial education, and basically is, does it matter and does it work? And is there an impact? Especially, most people are curious about whether or not there's a long-term benefit to financial education, not just a knowledge increase. Say, for example, you can pre and post test your students, but does it make a difference in their financial financial behaviors or attitudes down the road. And in particular, can we see a broad impact at a sort of higher level? And so there was a National Bureau of Economic Research study over a decade ago that looked at states that had a requirement for consumer education, but nothing had been done recently to look at this issue. And so we have a new study that basically says that yes, mandated courses in financial education do matter and can make a difference, and it can be a pretty significant difference. And so this new report that came out on this study, they looked at 3 states that have a requirement for financial education of some kind, and compared those to schools or to states that did not have a required course in personal finance. And what they did is that they showed that in the states that in which there was a requirement, our mandate had been put into place, that there is an effect and an impact on credit behavior in particular down the road. And what I think is really interesting, and this may be some of the shortfalls of some of the research, they looked at by implementation year when it had made a difference. So 1 year out, not a real big difference. But boy, can you see a difference in the 3rd year after implementation of the financial education mandate, what kind of a difference it made. So, look at Texas, just 1 year out of a 5-point change in the credit score all the way up to a 32-point difference. That's a very significant difference. Same thing over on the other side, where we're looking at the same states here, but in this case, we're looking at the 90-day delinquency rate. So where we want credit scores to go up, we want the delinquency rate to go down, and we see there again a pretty significant decrease in the rate from the first year through to the 3rd year. Something else that's coming up that I'd encourage you to check out and consider participating in and or watching afterwards is Visa's annual Financial Literacy Summit with the Federal Reserve Bank of Chicago. This is an annual event. They've done this for a number of years, and each year they have a theme or a focus. Last year's was on the unbanked and underbanked, and this year I think might have some particular interest for teachers, because it is a focus on improving millennials' financial literacy with mobile technology. This is an area that is of very great interest by those in the financial education community. And you can register to watch the online streaming version of the summit. That'll take place April 15th on tax day from 10 to 12:30 Eastern time. It's listed on their website in Central Time, so you have to do that conversion. Or if you want afterwards, then they put a video. So here you can see on the screen capture that there's an option to watch last year's, the 8th annual event. Once this one is done, they'll, I'm sure, put up the one from this year and make that available too if you're not able to watch live. I think it would actually might be interesting to have students watch some of it or a portion of it and react to the discussion. I think it would be sort of an interesting thing to do in class if you had that opportunity. Most of you probably don't have 2.5 hours of time in your week or during a day while you're teaching to watch the entire thing, but just might be fascinating. 3 other events that I wanted to promote this evening. The Federal Reserve Bank of Philadelphia, some of you may have been on previous sessions when we had Andrew Hill and or Todd Zartman from the Federal Reserve Bank of Philadelphia's Economic Education Department join us for programs, and they are going to be doing a series of programs here in the spring and then over the summer that relate to financial education. And I'd encourage folks, if you have the ability to attend any of these, to do so. You can register on their website right now. Registration for all 3 is now open. These are fantastic programs, very low cost to attend, and just really, really great programs for those that are here at the middle school level for that first one. And then the Keys to Financial Success program is basically where they give you everything that you need to teach a 1-semester course. The Keys to Financial Success course is for the most part, based on the Financial Fitness for Life curriculum from the Council on Economic Education. It's supplemented with some things that they developed in-house, as well as materials from Visa and a few other places. But everybody who participates gets all of the materials. You get a USB drive with the Financial Fitness for Life curriculum materials on it and everything that you need. And then their week-long Making Sense of Money and Banking, which is a little bit more of an econ focus, but also great if you're teaching monetary policy and any of those pieces in your personal finance courses. The other thing that they have on this page now is a video. It's a little over 2 minutes, and it includes a couple of teachers talking about their experiences with the programs and shows some snippets. They're very hands-on, very engaging. You get to do a lot of the activities and participate in what the lessons would look like as a participant, so that you're more confident taking those back to your classroom and using those with your students. So highly encourage you to consider scheduling yourself to go to one of those either in March or coming up over the summer. Another new resource that is available is the Math in the Real World set of lesson plans. The first, these are ongoing and rolling out as we speak. The first set have come out already, and a few more are coming out. I'm a little biased because I was part of the team that helped to write these. Actually, there on the screenshot that I captured, that one Graphs Mislead Us is one that I co-authored with a professor from South Africa. We participated in a program together now I guess December before last in St. Louis at the Federal Reserve Bank of St. Louis to start work on these lesson plans. And then that How Expensive Are Payday Loans lesson is another one that I wrote that one independently. But the majority of these are written by high school teachers. The team ones, a lot of those were co-written by math teachers with either econ or personal finance teachers as a team. And you'll find a lot of great resources in these. I'd encourage you, if you could, to send this link out to some of your math teachers and share with them the information about these lesson plans, because it's a great way for folks to, in some cases, use some pretty hefty math in with these. This is also something very applicable to high school economics courses or economics teachers. Some of you, I believe, are familiar with our model curriculum that we put out this fall, or just released this last fall. I like to refer to it as being in sort of 2 sections, the what and the how. So I'll talk to you just a little bit about those. So the what piece. So this shows the long-term transfer goals, the big ideas, and the essential questions for a pre-K to 12 financial education curriculum. So this is sort of, at a glance, what this would look like. Again, these are overarching across all of the grade levels, pre-kindergarten through 12. We decided to break down financial education into these 6 big ideas. You can slice this pie any number of ways, and we know that in every school, if we went to every school that does a course in personal finance, their units, for example, in a course would all look a little bit different. We just decided we had to pick one. So we actually went with the same breakdown as the National Endowment for Financial Education's newest version of their high school financial planning program, and organize things around that. It doesn't mean that this is the right way or the only way to do it. It was just the way that we chose as a team to organize ourselves in our work. For each big idea, we've identified the essential questions. Those were also listed on that previous document. And then by grade level, we have specific overarching concepts and then specific competencies within each of those grade bands, and then correlating those to the standards in economics, family consumer science, career education work, and BCIT, or business computer information technology. So you'll see if you download this document, we have this. It goes through all 6 of the big ideas with a list of personal finance concepts and competencies by grade level. This is sort of a snapshot version that doesn't include the competencies, but lists all of those standards at all of the grade levels by the concept. And this is available on SAS from the front page, or what I would like to call sort of the public side of SAS. So if you go to pdesas.org, go to the curriculum framework tab there in the green, and then click the tab for personal finance model curriculum. It's side by side there with the library model curriculum and the PA core curriculum framework. So this is where you'll find those 3 documents that I just showed you. Okay, I just want to make sure that my audio and everything else is still catching up and the slides are catching up. So will you click the raise your hand if you can see my focuses on the how slide right now? Okay, great. I appreciate it, you guys. We're definitely hampered a little bit with technology today. As I like to say, it's great when it works. I'm sure all of you have experienced a time or two when you hope something would work and it's not always cooperating. So that seems to be us today. All right, so the how piece, and this is, I'll show you where this lives on SAS. This is on the back end because we don't want to sort of give the keys to the kingdom, if you will, away with all of the assessment and everything else on the front end. So this is on the back end of SAS, and this is where we focus in on the integration K-8 to pre-K to 8, and then with very clear grade by grade delineation. I can tell you when you show a document with everything from pre-K all the way through 12th grade on it to a first grade teacher, for example, their eyes tend to sort of glaze over. But what we did to make that easier is make it a little bit more digestible. So first we developed grade band summaries. So this shows from pre-K to 2 what's where students would be focused, grades 3 to 5, and then 6 to 8. And then what I think are probably most useful then is breaking it down by individual grades. So if we want them to get to a certain point by grade 2, then this is what it would look like in pre-K, kindergarten, grade 1, and grade 2. In terms of how you would break that apart. So you don't need to do, for example, wants and needs in every single grade. You don't have to have a unit on wants and needs every single grade, kindergarten, first and second. We suggest that take place in first grade. And making connections, for example, in kindergarten between how community helpers provide services and earn money. We tried to work really closely with elementary school teachers in what they're already doing and where there could be ways to make these things make sense. So, for example, they very frequently talk about community helpers, firefighters and doctors and veterinarians and what have you in kindergarten. And our suggestion is that they incorporate that into a small financial education lesson, talking about how those individuals earn money for what they're doing. That our belief is that integration is important, and then we'd love to see it then with a capstone course at the high school to sort of cap things off. It's been developed in a traditional 1 semester sense. We have a lot of teachers that have we know teach on a block and will make the accommodations accordingly. We have a strong preference that it be taught in grades 11 through 12. Just because that's when students are most likely to be engaged and interested. in financial education classes, much more so than when they're freshmen and they haven't gotten a job, learned how much expensive car insurance or gasoline is, started to really pay attention to the price of what it's going to cost to go on to college or be living on their own in a year or two. So we find most of the teachers that we've worked with report much greater levels of success when they do this in grades 11 or 12. It also allows for a lot of flexibility with what department it offers. As I mentioned before, we've aligned with all 4 of those standards areas: economics, FC, CIT, career education, and work. So a lot of flexibility there. Minutes how you can access this. But module are these components that you'll see here. Basically, it breaks down design with the backward design. Things like, you know, people with lots of money don't need to budget. Well, that's not true. So we talk about some of the misconceptions that students frequently have and what some of those things are to look out for if you're teaching a course, especially if you're teaching a course for the first time and don't know maybe what students might come in thinking. And then we include, all of the basic components, the concepts, the competencies, the vocabulary. We give suggested assessments as well as then strategies and for instruction. And within each of those, then we have links to lesson plans from the National Endowment for Financial Education's High School Financial Planning Program, Take Charge Today's program, Visa's Practical Money Skills for Life, and all of those are hyperlinked. Then so they'll take you directly to the lesson once you're logged in. Those organizations do a really good job of updating their materials, so we didn't want to download their stuff and put them on our site. We want you to go to their site and register so that they know that you're using things, and that also when you get resources that they're the most current and up to date. We would not be able to update these documents every single time, say for example, that Take Charge Today updates a lesson plan or an activity. So we're sending you to where those live and where those are on their website. So the first time you access it, if you don't have a user ID with some of those organizations, you'll want to get those and then log in each time so that those links will work and take you directly where you need to go. And then with each of those, we also offer suggestions for differentiation, both for struggling and advanced learners, and then also interdisciplinary connections. The additional resources are quite rich in each one. We've pointed to ones that you've seen on some of our other webinars. So for example, EverFi is a popular program. We've linked to those and some of the others that we know connect and correlate to the personal finance course. To get to this, you want to go to the pdesas.org and log in, either in the top right-hand corner or down here at the registered users. If you're not logged in, you can join. It's very quick and easy to do. When you do that, then you'll go to the teacher tools up here in the top right-hand corner and then to curriculum mapping. And once you're logged into curriculum mapping, you'll see here the PA Standards Instructional Framework for Personal Finance is side by side with those for ELA and Math. So if you click on the frameworks for personal finance, you'll see the documents that I mentioned earlier, the grade band summaries, the grade level summaries, and then down below are each of the modules. So here you can click on this module 1 and it will take you to a screen that looks like this. You just continue to scroll and you'll see all of those components that we talked about earlier and a lot of hyperlinks here. For example, the focus standards there are all linked accordingly. The other way to get it is as a PDF, because one of the things that I found is that if you print, which you can choose the printer option here, or you can export this to Excel as well. But when you print to your printer, I don't know about you, but it's a a font size that's too small for me to easily read. So we have formatted this in a PDF that's a lot easier to go through. In the PDF, all of the hyperlinks should work just like they do on the website. To get to that, again, you're going to go into Teacher Tools to My Communities. And then once you're in the My Communities section, if it doesn't show up under your My Communities list, then you want to go to the keyword and type in financial education. And it should show up with the financial education learning community and give you the option to join. Once you have joined that community, this is sort of what it looks like, and I'll show you right now. We have 84 members. I'd love, by the way, for this to become a more active community. Anyone who is who joins is welcome to post to it and provide put out questions, share information, what have you. If you scroll all the way down to the page, you'll see the digital content repository. And this is where that complete model personal finance course in a PDF version is. So you would click on that to open or save it. Any questions thus far about the model curriculum or any of the other pieces of information so far that I shared, the survey or any of those? All right. I am not seeing any yet, but I did want to go back and answer the question about, are there new guidelines for teaching reconciling the checking book? Tricia did send me a message and said, yes, the checking activity and CMARC's Making the Right Money Moves booklet does include automatic withdrawals and online transactions in their checking account reconciliation activity. So if that's something that you're interested in, you might want to follow up with Tricia or with a credit union near you and see if they're using or can make those CMARC's booklets available to you. All right, and then I had another, some going forward, all of the stuff that I've talked about before was developed with teams of teachers. So we had a team of teachers that helped us develop the pre-K to 12 overarching model. We had another team of teachers that worked on the pre-K to 8 integration piece, and then another team of teachers that worked on the model course with us. And so I'm recruiting again to create one, possibly two additional groups to work with me. But what we're looking at is the development of an iTunes U course. If you're not familiar with these, it's an ability within iTunes to provide resources on a wide variety of topics, and students and teachers can access them from the iTunes U app, either on an iPad or a iPhone, or the way that these have been developed. There's also an Excel spreadsheet that includes all of the resources in that format for teachers. The Department of Education has partnered with iTunes U to prepare these, and the IUs and others are helping with this. All of the pieces that they have available, and if you do a search for Pennsylvania Learns on iTunes U, this is up in the upper right-hand corner is what that looks like. You'll see that all of the courses so far are math, ELA, and science. But we're looking forward to providing resources there for financial literacy. Basically, one of the things that we've heard is that teachers have a hard time locating resources in SAS. So was there a better, easier place that we can put it and make it more widely available? And so Pennsylvania Learns on iTunes U is an attempt to do that. So what I'm looking for are some teachers that are interested in helping me to locate, for the most part, digital resources for student use to augment the high school personal finance course. So for example, videos that teachers might use if they wanted to flip their classroom or to have students watch together even in a group in class. They can be anything from Khan Academy videos or teacher created videos. We may be looking at some of our team members to create their own either screencasting or live person recording kinds of things. Apps, other types of things that would augment a course so that teachers could have them easily accessible all in one place. So if this is something that would interest you, I would ask that you would get in touch with me and let me know. And we will, I'll be getting you additional information about that and what that'll look like. I'm hoping that we're going to be able to do the majority of this work in Teams online and not need to spend a considerable amount of time face to face. I think the nature of this work will lend itself well to an online exchange and some online dedicated meetings for this, but that'll be determined as we move forward. And then the second component, excuse me, is financial algebra. We're seeing a lot more schools in the state offering a course in financial algebra to really meet the needs of a math credit. And so we'd like to develop some additional resources. This photo that I've included is a Cengage textbook that's become quite popular in schools that are doing this. And one of the things that we've been hearing from some schools in terms of pushback to financial education is that a personal finance course cannot count towards NCAA eligibility. And the financial algebra folks have actually put together some documentation to show why, as a math credit, this would be eligible for NCAA consideration. Unfortunately, the current NCAA regulations specifically call out consumer education and personal finance as courses that are not eligible. So anyhow, for schools that are interested or concerned about that, making it a math course is certainly an option as well. That brings us to the end of our time together. If you have any questions, I will stay on for a few more minutes, but I thank you for participating today and for being a part of our webinar this evening.